I'm very pleased to be here in wheat country, and what we're talking about today is wheat, and what I'm attempting to do is to really increase the understanding of the markets. And partly what I do in the weekly letter that shows up on Think Wheat as well is to really understand how we fit into the world and how our prices are really established. So here's our outline. I'll take a little bit of a detour and talk about what I call outside influences. And I think right now we all know about some of the political hurdles that we are facing. We'll move on to the global wheat numbers. And I always say that while it sometimes looks a little bit boring to have a lot of numbers on the table, without looking at some of the numbers, you can't anticipate what's going to happen. And that's very, very important to farmers. And then from there, we ease into some of the Canadian balance sheet, into the Canadian numbers. I inserted one slide that's a little bit unusual, and it talks about what matters to you when you price your grain. So what it says on the left-hand side is that, you know, in Canada, we don't tend to set the commodity prices. We derive them from what happens in the world markets. And therefore, you need to know what's happening in the world. And again, you know, Sask Wheat helps with that, with the weekly letter that's on their website. And from that, you really have to extrapolate three things: where the market is. You generally know that because you phone up your elevators or your agents, and you know it's fairly easy to find out nowadays. But then importantly, you have to have an opinion as to where the market is going. It gives you the trend, and that will help you decide when to hold and when to sell. And I'm a very strong believer that beyond all the agronomic work that you do, you know, the diverse tasks that you have as a farm, one of the places where you can actually improve the returns on the farm is to sell at a good point in time. And I'm not talking about buying and selling and being very complicated about trading. You know, if you're inclined for that, you can do that. But your biggest gain is to pull the trigger at the right point in time. And perhaps at this time of the year, you know, it's a bit late, but you know, what to grow relative to cost of production and relative to demand. So as we go through some of the sections in the presentation, just think back as to how that impacts some of these 3 points. So again, political hurdles. I don't think you can talk about markets nowadays with at least mentioning them and outlining them a little bit. And I've picked two that particularly pertain to wheat right now, so China and Saudi Arabia. And this is a slide that shows you the Canadian exposure to China right now. And it lists, you know, a whole range of our major commodities. The red bar is 2018-19 exports versus 17-18. And on the right-hand side, it gives the percentage sales to China of total exports. And I'll read some of them out because, you know, it really gives you the importance of it. In total, we sell 33% of those commodities shown to China. So every third cargo goes there, basically. Peas, 65%. Soybeans, 92%. Canola, and of course, we're all anxious about that right now, 46%. Flax, 54%. Barley, 59% this year. And wheat, year-to-date, 12%. So should something happen to that market for whatever reason, Huawei, et cetera, that's the exposure that we have. And obviously, that will have an effect on your price if you can't market in a normal fashion to that destination. Am I standing in your way on the slides? No? Even when we think about products, you know, and here we have canola oil, a processed product. You can see the exposure to China. That's the yellow line here. It's the second largest buyer nowadays. So even, you know, they could retaliate against buying canola oil. It's second only to the United States in terms of purchasing from us. You could say, well, if China is that dependent on our products, can they actually afford not to buy from us? And I thought I'd put one slide on that, and I'm saying Canada is extremely vulnerable. It depends a little bit on the timing, but if I look at peas, and I remember the big exposure there, right now we are the only ones that have any sizable stocks. Eastern Europe is more or less sold out, which is good. So they'd have to wait, but after the summer 2019, they certainly have ready access to Eastern Europe. And we'll talk about infrastructure in a second, and you know that kind of piece will fall into place as well. Canola, well, there are lots of other oilseeds, US and South America. And they have already announced that they will increase soybean imports by 1.35 million tons this year in replacement of rapeseed. That's a statement they have made. If they will do that or not, we will see, but they have already said that. So, there's an easy substitution there. And don't forget, it's basically a lead economy. It's not a free economy, so those things are possible. Flaxseed, well, Eastern Europe and Kazakhstan. Again, when we talk about infrastructure, you'll see that. Barley, Australia probably have a better crop in 2019, so they will get access there. Wheat, lots in Eastern Europe, Australia again. So yes, I think they can do without Canada if they choose, right? I put a slide here, China Plus, because there's also a flip side to that. They have been fighting with the United States for a little while, and you can see that Canadian wheat exports to China have actually gone up quite a bit. So year to date, because the US has exported 0 tons of wheat into China year to date, we are one of the countries that has benefited from that. So in wheat year to date, we were actually a beneficiary of some of the fighting between the US and China. And here's just an outline, China's wheat imports for the first 4 months of the marketing year. So Canada gained, Kazakhstan gained, and the United States was 100% loser. And Australia lost tonnage, but that was because they had a drought. Saudi Arabia, I thought I'd have one slide on that. And I don't know if you remember the tweet by our Minister of, what's she called, External Affairs. I actually like Chrystia Freeland, but I think diplomacy you shouldn't do over tweets, and you shouldn't follow somebody else's lead on that. It's not working. What you're seeing here is barley in blue and wheat exports into Saudi Arabia. So in 2009, we exported 1.3 million tons. It has been shrinking a bit, but even 2 years ago, it was still 440,000 tons. And then you can see we have done as much as 800,000 tons of barley. Does anybody know how many tons we shipped this year? Any tries? It's on the right-hand side. There are 2 big fat zeros there. I mean, we have done nothing. Same as, China and the United States. So that's not very good. I don't think, as a nation so dependent on exports, without a lot of clout, we can afford that kind of stuff. So we need to somehow fix that. Just very quickly, some other recent policy developments. The Russian Federation, Kazakhstan, and Iran signed an MOU on wheat for trade cooperation. And so there are always things going on, and we cannot afford not to pay attention to that. I know we have a new ag minister. We don't quite know what she stands for, but hopefully she pays a little more attention to the West. That's my hope. Still talking about the outside influences on the markets. Just a very, very quick picture on the World Economic Outlook. And you can see it's called down a little bit for 2019 as opposed to 2018. Up for 2020, I think that's still up for grabs, but that's not good. Why do we look at these things? Here are some more concrete numbers for China, US. Canada, by the way, OECD lowered our number last week to 1.5% growth. That's tepid, if that, not very good. Why do we look at that? Because in the end, particularly when we think about developing countries, and I'm thinking about India for pulses, China, et cetera. Well, China is a very special case because they have a relatively high rate. Africa, for example, on wheat. Consumers in those countries spend a big chunk of their income on food. And so consumer spending depends on their purchasing power. So, if the economic well-being goes down, they tend to buy less. So that worries us a little bit. And when you think about wheat prices for some of the countries in the Middle East, when that value falls seriously, they actually can have problems. And we saw that in January when Egypt had trouble opening LCs, actually, because wheat at that time was very, very cheap. I wanted to also touch on competitiveness and infrastructure, because I think we need to know that when we think about policy and what our associations are supposed to do and some of these things. And here's just a picture showing, and it's a study from Australia, by the way, because they're always very concerned about competitiveness. It's one of the things that I miss when we look at what do our agencies do, do we actually study these things where we stand up in the world? And this pertains to wheat. It's production costs in different countries and the gross revenue. And when I came to Canada, which was in 1976 from Europe, Canada was one of the lowest cost producers for wheat. Why? Because your land prices at that time were still very, very low. And that is no longer the case. We're actually one of the, well, in the middle, but one of the somewhat higher cost producers. The low cost producers are now in Russia and the Ukraine. And that's important when you're competing for markets, right? Because you have some margins to play with in order to be competitive. Into that, and the next slide will show you how that ties together, we also have relatively high supply chain costs. And I had that slide in the winter, so I'm recycling it a bit. It's from the same study, and it says that in order to get from the field onto the water, the Ukraine spends for wheat about $190, Australia $291, and Canada $304, including cost of production, right? So we are no longer one of the cheap ones on the block. And here's how some of these things tie together, and I apologize, I have it for linseed, rapeseed, and lentils. I'm working on getting the same data for wheat, but it makes the point. When we look at linseed, for example, cost of production in Canada is $235 versus $119 in Kazakhstan. Transportation costs from Canada into Belgium, because we go over the water, are actually quite a bit cheaper than overland from Kazakhstan into the same place. They're $93 versus $134. But when I add cost of production and the supply chain costs together, Kazakhstan is significantly $74 cheaper, meaning they're very, very competitive into Europe. And that accounts, the same works for some of the other products. The numbers are a bit different, but it works the same. So we have to be cognizant of that, and I think we have the attitude on supply chain costs. We kind of to add on, some of the farming costs, for example, are the highest in the world, and so on. But we have to learn to be cognizant. Issue of export capacity changes in the world, and I've talked about this before. Russia has a 9-fold increase in export capacity over the last 15 years, and they want to increase that by another 30 million tons of grain, right? Brazil, there was just an article today that they are thinking that some of the big 4 grain companies want to get together with a Brazilian one to take over Road 186, which collects a lot of the soybeans to the northern ports, et cetera, to improve that infrastructure. Silk Road Initiative China, that's designed to streamline sourcing raw material and reduce costs, right? Why is that important? Here's one example, and it's the connection, the railway connection that already exists between Duisburg in Germany and Shanghai, and it goes through Russia and it goes through Kazakhstan. The Chinese investment in Kazakh infrastructure alone is $43 billion so far. And so when we think about wheat, just imagine these are all wheat growing areas going into China, going south towards the south of the Black Sea, et cetera, designed to have cheap infrastructure to collect those things. What will that do to our competitiveness into those countries? We can't even build a bloody pipeline. So, to be just, I listed the improvements at the West Coast. There are a number of them over the last few years. This is all investment by grain companies primarily. And the biggest one, of course, G3 terminal that's supposed to open in late 2020 that would add on 6 million tons. So they're big improvements. Richardson has added, Viterra has upgraded, Cargill has some rail improvements, et cetera. There's some important ones in terms of container, the ability to load containers more cheaply and so on. What I'm always missing when we think about capacity is what are we doing about the railroad to feed into that? And I don't see a lot there, and certainly I don't see any plans, and it worries me. We have to get a handle of that, onto that, and maybe with our new ag minister we can at least talk about it. But it's not good enough because the world around us is changing at a much more rapid pace than it has in the last 35 years that I've been around in the grain industry. So that's, just the background to keep in mind. And when we talk about international wheat balance sheet, what people around the world grow, you will see how important some of these things are. We've got to be able to get our grain to the markets when the market is there. The idea by the railroads to do it in an even intervals every month is not market friendly. It's not how the world works. So here's a very quick picture of major wheat exporters and importers. Yellow are the major exporters, and these are the major importers. So you can see some in South America where we do relatively well. You can see North Africa and the Middle East and into Asia. That's where the markets are nowadays. Here are some of the numbers, and we talked about them in January. When we talk about the ongoing crop year, 18-19, we actually had a very, very good setting for wheat because production on wheat was smaller than in 2017, by about 29 million tons. That was significant. Wheat trade was a little bit smaller as it turned out, but not hugely so. Consumption still 3 million tons higher than the year before. And importantly, when we end this year, ending stocks are about 9 million tons smaller. The number of numbers around, but that's about correct. And most importantly, the ending stocks in the major exporting countries like ours are down 16 million tons. So you go into the new crop year with a reduced burden, actually. So the wheat market was actually one of the more constructive ones. Here's just a better picture on what happened to the ending stocks. Total ending stocks are the bars here. The yellow is 1918. You have the stock-use ratio turning down this year, and this is these are the ending stocks for the major exporters that are down quite significantly. So that's a positive to take along, actually. Just one picture on the production side. Why do people, when you read the weekly letter on wheat, why do I oftentimes put these world numbers up there? Well, they change over time a little bit because for most of them, they're monthly estimates. And so you have to look at them once in a while to refresh what's happening. So the first half of the crop year, we look at production numbers a lot as they come in, around the world. And the second half of the crop year, we spend more time on the demand numbers. Are they as per expectation, or they're lagging behind, and so on. So this is what happened to them. We had a bit of an upturn January forward in the wheat numbers. And so in this 18-19 year, what happened really was that we had some major upsets. We only had 91% of the previous year's production in the EU, and 84%, the most important one, in Russia. And Australia had a 20% reduction from the previous year. That's why we have increased our exports. We are running 17% ahead of last year's pace, because it allowed us, to export into those holes. They weren't quite, so volume driven. And, that's the kind of thing we look at then. So we line up exports by exporter and see where the big changes were. This is for this ongoing year. You can see Australia, a big drop, EU, a big drop, Russia, a big drop. United States had a recovery, and Canada was up a little bit. So we knew, there were some openings in terms of the market. And we'll do the same for this year. Russia, of course, was always the big question mark. And while they had a lot less grain, here it actually shows exports in red versus the previous years. And everybody thought it would fall off, particularly January forward. They have been able to maintain those red bars. And therefore, we haven't, especially the Americans, haven't been able to export quite as much wheat as they thought, particularly January forward. It was quite surprising how Russia has been able to keep that up, even though the domestic prices for flour are at unprecedented highs. But again, it's a planned economy, and some, they have actually been able to keep the exports up. And I should add, they have the capacity, both rail and export port, to do so. Look at those increases just over the last few years. It's really something to behold. And so in the estimates, in the previous WASDE report, actually not the last one, they increased Russian export expectations to 37 million tons even for this year. Over the last little while, though, what has happened is the relative competitiveness between countries has changed a little bit. Russian wheat has become a little more expensive relative compared to EU, and it's now the European wheat that's coming very strongly onto the market into the Middle East. So that's what we're seeing right now. Here's a picture of the FOB prices in US dollars for the various types of wheat: hard red winter, soft red winter, soft white, and hard red spring. And a lot of times we compete with hard red winter, and I know that Dean will talk about that kind of thing a little bit later on. So prices were down in February because there was intense competition, and we are looking at fairly good conditions in the Northern Hemisphere for new crop for next year already. And that's another thing I should emphasize. Once we get into February, March, people, particularly in Europe and in the Middle East, will start looking at next year's crop already because they harvest earlier than we do. So your run for old crop runs out a little more quickly, I think, than most people think, because it's not the same rhythm as we have. So both the EU and the US are expected to have stronger exports in the coming months because the Black Sea supplies are falling behind now. They're dropping off. And Australia, also still very, very expensive. So here, US wheat exports, because we kind of take our gains from them, they're also up in total this year. So blue is accumulated exports. These are sales not shipped yet, and that's what they intend to do for the rest of the year. Just some significant events to show you what kind of happens in the market on a weekly basis and things that we watch. So we had an Egyptian tender that actually traded in February $10 cheaper than the month before. So the cash prices have fallen as well, and you have seen that also on your market prices. And it was not Russia, but France sold most of the tender. Last week, we still have a lot of tonnage being traded. We had Saudi Arabia buying, we had Syria buying, we had Korea buying, Philippines buying. Algeria actually bought 300,000 tons of durum just this past week. Iraq bought 50,000 tons from us at a very good price. That actually works back to about $7.45 or so without margin. US wheat sales were actually pretty good. On a monthly basis, we also look very closely at WASDE reports. USDA has always very good data on international wheat. And basically what we can take away from the latest report is that former Soviet Union production was downgraded a bit. So production was actually down by about 1 million tons, but demand was also downgraded. And that's a little bit worrisome for the whole year. And therefore ending stocks are actually inched up by about 3 million tons over the last month report. So what we're looking at right now is really still what's happening with the US and China trade talks. Will they actually start buying US wheat? That would be beneficial. Pace of Russian wheat exports, they will fall off now. And what's happening to the weather in the various producing areas. All in all, though, because as I said, we are now starting to look more and more at new crop. I think that the 1918 wheat is over. I don't expect a lot of upturn in the wheat unless we get China or unless there are major weather problems developing around the world for next year's production. And don't forget, when I look at some of the new numbers now, when we start looking at the next year's crop, we had much higher production numbers until the problems developed and wheat prices became strong in the late summer. So that's a possibility, because some of the numbers that we are doing for next year show a strong wheat production. Eastern Europe, and particularly Russia, has made good money on wheat because they also have a very weak ruble. But it is possible. At the moment, though, the longer-term outlook is for increased Russian and EU crops. Again, have made decent money. So they would come back to some of those higher numbers that we have seen in previous years. And the EU and Russia are very important in that they don't have as much storage as us. They go very aggressively into the market right after harvest. And so, early competition, September through January, is probably going to be very, very strong if they have the crop they're expecting. So, we'll be looking for some of the production numbers forward now. And then again, I alluded earlier that we're a little bit concerned about the cash in the consuming countries. And when we look at Canada, we look at the specific countries that buy from us. And so if their economies are not going as well, the question is, will they buy as much wheat as they did before? So that's the other thing that we are watching. But again, for this year, I don't think we can expect a lot of major improvements. USDA outlook, they think the winter wheat area is actually down, but the spring wheat area is expected to be up by as much as 1 million tons. So that's important for us when we look at new crop. So for 1920, about a week ago, we did some numbers. And when you add them all up, so we restored European production, we restored Russia and and Australia to some degree. And what we ended up with was about 758 million tons of wheat this coming year, produced around the world, compared to 735 last year. So, again, we'll have to watch that number. And as it so happens, late last week, the FAO came out with an early forecast. And I was actually quite tickled because they have 757 million tons. So, the number certainly seems to be in the ballpark as to what we can see right now. So it would be an increase of 23 million tons or 3% next year. Wheat production by major producers. Again, the red bars are what we expect for next year, so it would restore some of the previous production. We tried to look at consumption for 1920, so the early estimate would be about an increase of 7.5 million tons or 1%. So it's a smaller increase than the increase in production. And, that just kind of summarizes the same thing. So these are actually exports. We expect European and Russian exports up next year. When you do a balance sheet, though, remember I said earlier we are carrying in less wheat, particularly with the major exporters this year than last year. So when you actually put it on a balance sheet, meaning you use the production, you add in last year's carry-in, consumption, and ending stocks, because the carry-in this year is smaller than last year, the supply number only changes by around 10 million tons. And the carry-out, if consumption stays the 1% up, about 270 million tons, which is not that bad. So that's the one saving grace, and that's why we emphasized the ending stocks numbers earlier. So the big question to me is, numbers not too bad as long as consumption and exports go up, but who will capture the export demand and will demand potentially be down? So that's the one thing we have to watch very, very carefully. And that's why it's important to have infrastructure to move product when you can, because the market doesn't wait for you. I'm repeating just a couple of slides from January, and it's actually the increase in wheat export volumes over time have been very, very good. And the one thing that worries me is that while overall demand, export demand has been increasing, our market share has been decreasing. Now this year will be a little bit better than the 12.5% actually. And that has to do with infrastructure and the ability to respond to the market. So finally, we're going into the Canadian numbers themselves. And what we're first looking at is the green bars, because that's the ongoing crop here. And the question that we have now is, will we reach the 18.7 million tons that AFC thinks we can export this year? I think it will be slightly less than that, but certainly more than the previous year, which was only 17.4 million tons. If we do less than the 18.7 million tons, and right now we're on pace, we're at week 31, if I extrapolate what we have done into week 52, then we export 18 million tons. And that would actually increase the carry-out higher than what AFC is thinking, not to 4 million, but to 4.6 million tons. So it would be nice if we could actually up the pace just a little bit to keep those ending stocks down, because again, it helps us into next year. Year to date, we have exported 8.4 million tons versus 7 last year. And the biggest buyers so far were China and Indonesia. So again, China, very important this year. And these are just the weekly export, 10.7 million tons year to date into week 31. And these numbers, by the way, you can look up at the Grain Commission, on a weekly basis. Top 10 importers of Canadian wheat: China, Indonesia, US, Colombia. Here's Japan, a quality buyer. Mexico, Chile, Ecuador, Sri Lanka, United Kingdom. UK also is a quality buyer. So you can see the kind of buyers we sell into. So some of the gross domestic product data or some of the economic well-being does become important to their demand. When we look at the balance sheet for 2019-20, next year, agriculture and agri-food is saying will increase acres by 9.1%. I tend to think it's probably going to be more than around 6%, except, of course, the canola question puts a bit of a question mark there. Maybe people will be scared of canola and increase the wheat a bit. That could certainly happen. It's not such a difficult switch. Given the AFC number, we'll have a bit over 28 million ton production and 32.1 million ton supply. And they think we'll do 18.5 million ton exports. I would think that's going to be a challenge if nothing happens to production in other people's in other exporters, countries. Because this year we were certainly helped a little bit by the reduction in production by some of them. So that's going to be a challenge. Ending stocks, unless something happens in the world, I think ending stocks will doubtlessly increase in Canada again next year. And that's what the numbers tell us. Just a very quick picture, how we get at some of these numbers, because it has to balance out with the other crops. We had thought for a long time canola will slightly reduce. We'll have to see, if that changes a little bit. So our suggestions haven't really changed. Definitely, we hope you sold old crop. We talked about that in January at the wheat meeting. We would hold new crop sales for now because we don't quite know what's happening to China and the US, right? Should China open up for US wheat, I think it would support the futures and might give you a little bit of a lift. But that's what that is based on, and as I said, in general, we don't think the market itself will do an awful lot. Do we have durum growers around here? I would think so. And the durum story certainly has been a very, very difficult one. Durum production this year in the world was up by about 1 million tons. Biggest production increases Algeria and Canada, by the way, and in the US, a bit in Morocco and Tunisia, decreases in the EU, Australia certainly. And the supply rose by about 800,000 tons because of the lower carrying stocks. Ending stocks will increase to about 11 million tons. So, I think you have seen that in prices. So the ongoing year is the blue line. And when I look at the durum performance, I don't think there's a chance in hell we'll reach the 4.1 million ton exports that agriculture and agri-food is scheduling. Week 31, we have done 2 million tons, and that annualizes to 3.4. If that happens, the carryout could be 2.7 million tons instead of 2, so that's double the previous year. That's the problem we're looking at with durum. So it shows you where some of the problems are. Italy is behind by almost 100,000 tons. This is into December. These are the destination numbers we have. And Algeria is also behind because they had a good production themselves. Although, as Dean will tell you, there are some quality problems. So year to date, we are running behind about 400,000 tons in terms of exports versus last year. It shows you the problem in Italy and Algeria, and we have done better in Morocco and the United States. Year to date. Top 10 importers, you can see the US is actually our biggest buyer. So we hope we get along with them. Morocco, Italy, and then Algeria, were the top buyers so far. And you can see that actually US durum imports have gone up quite a bit, and the exports have gone up. I think they're exporting some of our durum as well into some certain destinations as well. Canada is still the top durum exporter in the world. So, what happens here matters a lot. So if we reduce acres a lot, the world certainly will take notice because it will affect, that number. For next year, AFC thinks you will reduce acres by 15%. We rarely have such a big swing. It's more likely, I think, to be around 10%. So our supply will actually fall a little bit. But remember, I think the carryout is going to be higher than AFC thinks. So that would put us back to the 7.6 million tons, which is very similar to what we had in 16, 17. Lots of durum around. And again, question the export number here. AFC is expecting 4.5 million tons for next year. I sure hope that's correct, but it will be a stretch. World durum production will fall, we think, by about 1.4 million tons because seeded area is going to go down. Supply won't fall as much because of those ending stocks, remember. Use is relatively stable for durum, 37, 38 million tons. So ending stocks will be down just a little bit. So no easy answers on the durum. It's well supplied. Some of the recent durum tenders, remember there was also Algeria that bought some durum wheat just this past week. So, watch what's showing up at the elevators. When you see $7, I would certainly sell. I don't know what to say for new crop a lot. I would plant a little bit less and hold for now because it's dry in North Africa. So maybe, we get some help by the weather on the durum side.